And we are back. So it's been a little bit of time since we last had a catch up on what I thought was going on with the market. So I thought, what better time than to do it today? So I've been away busy working on a few things. Still very busy with that stuff. So the plan today is just to look at Bitcoin. We're not going to look at the wider market. I am going to do a session on that later in the week. So if you've got any suggestions for what charts or what sectors you'd like me to take a look at, please leave a comment below the video. So please remember to like the video and subscribe if you haven't already. But yeah, so let's get into it. So we will have a little bit of a step back and have a look at the big picture, talk about what happened last time we had a video, and then generally what I think is going to happen next, or what technically looks like it could happen. So it's always good to come back and have a look generally within the Bitcoin cycle. Whereabouts are we? So I like to look versus the halving dates, and you can see versus the previous cycles, we're generally quite a way through the bear market, or basically from the top effectively. We've come quite a long way through the cycle, and we're looking for that bottom, which in the previous two cycles has come, around day 900 or so, give or take a couple of months. So that's why a lot of people think, the bottom's going to come towards the end of the year. Whether that happens or not remains to be seen. But generally speaking, based on where we are now in each of the previous cycles, so in the first cycle that we generally track, we had another breakdown from where we currently are at around about day 693, call it 700. There was another breakdown. The 2017 cycle ended up breaking down again, and then so did the previous cycle. In 2021, we saw a further drawdown. So that's kind of what people are expecting to happen. Another way of looking at this is something which I've shared on Twitter, which is these custom bands which I've made, and really they're just deviation bands. And you can see in all of the previous cycles, so going back to the breakdown from the 2015 cycle, or 2013 into 2015 cycle, we broke down and hit the lows in that band. We did it again in 2018, and we did it again in 2022. Now, the only difference really is between all of these cycles, we've had diminishing highs, but the lows have generally came back into these bands. So obviously, where are they now? It's somewhere between 40 and 45. So if there was to be a similar kind of drawdown to what we've seen previously, that's kind of where I would expect things to play out. However, the big caveat is, well, we actually went quite a bit less high or diminished highs this time versus what we've seen previously. So, I mean, even that happened this previous cycle. We did see a diminishing high versus the prior cycle, but it did somehow work its way down there as a result of FTX implosion and all that other stuff that went on. So that's kind of the general idea. Another thing to look at, back in 2018, this is where I took on that bet with Leah Wald about the bottom being in. One of the reasons that really made me believe that at the time was because when we have a point in the market where the price really escapes from and there's just no real opportunity to get back in, it's like a retest, that generally signals to me that there's a good chance that could be a pivotal point for price action again in the future, and generally that is what happened over here. Now I think the point for that in this cycle is roughly around the sort of 50k level. So in people's minds that'll be broadly half of the way to 120, obviously not quite, but it's half of 100, which is where we saw a lot of OGs selling. So that kind of stands out to me as potentially being a level where if we don't get the deviation lower because of the fact that we're having these diminishing returns, if we were to see another drawdown, that might be where we come to. Similarly, in the previous cycle, it was a little bit different, but there was a breakaway just above sort of, what's that there, about 15,000, give or take. These things aren't exactly precise, but this breakaway never really gave you a chance to didn't give you a chance to get back in. So around that area again was kind of pivotal. So there's a lot of things there sort of saying, well, yeah, maybe there's some downside to go, particularly based on timing, particularly based on deviations previously, but also it may not be quite as deep if it does happen as we've seen previously. So another thing that I mentioned or I posted on Twitter was that this yellow line, this yellow deviation line, generally when we go below it, we're on that trip to the final blowout or into that phase of blowout. So you can see last cycle we broke down below that yellow line, came back, retested it and came back down. Previous cycle broke down quite convincingly and didn't come back, just went straight to the bands. And then also in the cycle prior, lost the yellow line, came back, ran above, I think that's about 13 to 18% or something. Don't ask me how I know that, but ultimately came back down to where we're talking about. So that's the main thing. A couple of other things that are interesting is this is identical in terms of the gradient of descent that we've seen to the prior cycle. So that's another reason why everyone's sort of getting excited about these things being quite similar to previous. So before we get into the where are we at this moment in particular time, I think it's worth mentioning a few things that would make it obvious to me that the bull market might be back in action. So that would be either we get, a deviation where it becomes attractive to buy, which I've mentioned, or this trend line breaks out, which we have obviously here at the same gradient as mentioned, or the yellow line is broken and there's a weekly close above that. Last week we did break it, but then it got hammered back down. A couple of other things are, should we see the weekly super trend break, which is what we saw here. We actually saw the yellow line, the super trend break at the same time. So that's like great confluence there, having already hit the bottom. Like this is sort of perfect scenario kind of thing. And then eventually, obviously, it broke the trend as well. So getting in amongst the price action in the early 20s obviously served very well. And in fact, the super trend stayed intact all of the way through to this breakdown from 107 or K or whatever it was, 105. And again, it happened over here, broke the yellow line, broke the super trend, and away it went after it hit the low. So, this is just a question of potentially repeating the same task. But I have to say, I do slightly favour the idea of us not going all the way down to these levels. I mean, there is a lot of things going on in the world and in the other markets out there, with the war in Iran at the minute and the way that could escalate. It's unknown what the outcome's going to be with regards to inflation and stuff like that. We'll talk about that later in the week. I want to keep this one short. So there is potential scenarios definitely in the mix for us to get down there. But I also like to look at the Bitcoin energy production cost, rather, which has been pretty good historically in finding the bottoms or at least supporting the bottoms. So getting pretty deep into where the production cost is right below the bottoms, or right at the bottoms rather. It typically comes and challenges these lows. That low at the minute is 50k or 49,500. So we have actually tipped into it a little bit, similar to over here. Actually, again, something very similar to last cycle. But it kind of says maybe there's a little bit of room for further down. But it's sort of suggesting that anything below 50 would be tricky, which again gives the idea that maybe these lows don't quite get hit if there was another breakdown. But it does also have confluence with the idea that this sort of 50 level, and the half psychological thing could be where we end up. I think this here at about 38.5k was the lows that iBit has seen effectively. So I'd always said that it would be sort of magic if it came back down to that number and then got bought up. But long term, in my opinion, particularly based on what we've seen previously with Bitcoin, anything in this sort of 40 to 50 range could end up serving well in the long term. However, those who are a bit more conservative may wait for, the ultimate signal, which is when all of these things break. I mean, it happened there, look, yellow line break, super trend break, trend line break, all at the same time. So there's plenty of reason to not rush into do anything here. There's still a lot of risk around in the world, uncertainty, potential inflation could come back into the equation and so on. So I don't feel like it's rushed. I think it's quite easy to have a measured approach here to the situation. The only kind of thing that would be a bit strange is if we did come up and break this line now, and then we didn't break the weekly super trend. But anyway, we've got to work with what we've got, and that's my kind of macro view of it. Now, if we come back to where we were last time we spoke, which was in early January, I was talking about this consolidation. So I don't know exactly what the date was, but it was around this sort of period. I was talking about how what I used to like to talk about in the Telegram channel for the OGs was, we obviously didn't have that trend at the time, was when you have a stiletto pattern, which I like to think of. You get the heel and then you get the shoe. I mean, ideally it would come down here, but it didn't quite that time. But anyway, it came to here, and then you get this kick up, and then it completes the down move. And this was like almost a perfect AB equals CD move down. So measured down move. And the question is, are we going to see another one of those? Because as I pointed out in the Telegram channel, you should follow this, by the way. I'll put the link in the description below. filb TA. I think there's some scammy counterfeit one out there, so make sure you get the right channel. But like I said before, we were consolidating. We had our little stiletto, and then we came back, retested the 50 DMA, deviated outside the range, came back, closed below, rejection, and then the pattern played out. So in the Telegram channel, as I was mentioning, I did say the other day, I thought that we might deviate above that yellow line, put in a lower high, and then close below. And it just so happens to be exactly what happened. We came above, deviated, rejection. But what didn't actually happen was we didn't test that 50-day moving average. And the markets just love to find out if the 50 is or isn't rejection. So it's likely that we'll see some sort of resistance, in my opinion, from the bears around here. We've already seen it once. We've now seen the 50-day moving average come down further. So in here, I mean, we're seeing a little bit of rejection at the minute. If we come up into here and it actually forms a lower high with a rejection off the 50 DMA and drops back in the range, to me, that's going to start to look like the bearish scenario might play out. And I mean, you can kind of imagine what happens. Rejection, come back down, and then maybe retest the 50, and then maybe it plays out and it goes to 50k or 40k or whatever's going to happen. We will have a quick look at the measured move just for consistency, where that would take us. So yeah, again, 49,500. So there's obviously no guarantees with this, and this is just a technical out view of it, or my interpretation of it. So I think there's potentially room for a little bit more upside here. We can have a look at Trader, which is what I use for my positioning of the derivatives market. What we've seen the market pushing back up, people shorting the market, and we are coming into finding the order book slightly bearish here for the first time. So there is a lot of people, or a lot of passive asks on the book versus the bid across 25%, which is again one of the areas that I like to look, or the depth that I like to look at. And we can see as we're coming up to the highs here, we do have some open interest coming. Not anywhere near as much as we had on the run up to about 74k last week. But if we continue to see open interest increasing, people shorting it, we're going to get towards that 50k. And then the first sign of finding the lower high, is a little tip, would be seeing price start to stutter, the market generally going flat, and crucially open interest coming down. So once this lower high was put in with continuing decreasing open interest, the downtrend was pretty much confirmed, and then obviously that changed when we started to see open interest increase and then people shorting again. So yeah, to summarize, overall I don't think the idea that we go lower has completely gone away. I think there's a bit of froth going on at the minute. The market's very volatile with the war situation, but short term maybe we see a little bit of a press higher, and then make a decision around this 50. I think if we see a close above the 50, taking out the previous high, and open interest keep going up, people keep shorting it, the likelihood is that we're going to continue. But I have to say I would expect the bears to come in at the 50-day moving average. That's my initial thoughts anyway, if it gets there. Below, where it gets really super bearish, in my opinion, would be closing below the kind of pivot point on Sunday, which was about 65k. So if price comes all the way back down and we see, like we saw last time with open interest decreasing, and we get below 65, maybe that run on to 50 is there. What I would want to see, if that does happen, is some rejection off here, and then game on for the lower outcome. So I think final point really is that while all of this chat about potentially going lower is technically relevant, I think it's worth mentioning, we aren't at 89k anymore, and this is like even if you believe we'll go lower, and even if you believe it'll take time and to break this ultimate trend, it is relatively late in the day, so the risk to reward is lower now than it was when we were speaking last time. So just bear that in mind. So that's really it for today. As I said, I want to try and keep these things quicker. We're going to do a Bitcoin update earlier in the week. Then when I've had a bit of a chance to get my head around what's going on in the world later in the week, you can give me some ideas about what you want for review of the market, and then I'll do that. And we'll try and keep this up ongoing. If you like the video, then there's more chance of me keeping it going. If you don't, well, I don't know whether you want me to do them or not. But yeah, so thanks for watching, and I'll speak to you next time.